Welcome to this week's episode of the Zaner MarketCast, your one stop for all of the agricultural market news. This week, we're going to take a look at a few grain agricultural market happenings. A lot of stuff going on this week. We'll take a quick look at that, talk about maybe some things you can do or look at for your operation as we move through what has been a rather tumultuous week. I'm Joe Nikruto. I'm here as always with
Dan Hussey.
Dan Hussey.
How's it going, Joe?
The house. Oh, man, it's going great. How are you doing?
I'm good. Good to have this week behind us. It might be one of those last real cold weeks of the year it's looking, but I'm not going to bet on that one until we're into April.
For sure. Second week of the forecast, they're talking about above average temps in the Midwest. I bet a lot of folks here are looking forward to that.
Yeah, I'm getting the beach gear ready, Joe.
It's going to be 40 degrees. That's going to be like a heat wave.
Yeah, actually, I'll be using it as that first opportunity to take down Christmas lights, to start to actually do some stuff because, there's things to be done. And I imagine, though, a lot of places around the country, especially cattlemen, are probably looking forward to a little bit of a relief here in this weather as well.
I would guess you get this far into the year, it's already essentially the end of February, and I start thinking there's no sense in taking that Christmas tree down because it's just going to be the Christmas season.
Might as well just put it back up.
It's just going to be the Christmas season here in a few months anyway. One of the big efficiency things for me.
And what is time but a construct of human endeavor, right? Yeah.
One of the big efficiency things for me throughout the year is just leaving that Christmas tree up, and it just saves so much time come December 28th when you're supposed to have it back up.
Why don't we have a Valentine's Day tree and a Easter tree and a 4th of July tree? I think you're onto something, Joe.
Valentine's Day, I'm not sure what you're talking about. As a single man, Dan, I don't really recall what that would be. You must be putting together big plans for Valentine's Day, man. In your position,
no. We've got 2 kids with another one on the way. We'll be lucky if we can even get a few minutes to ourselves away from the kids that night. But no, we're at that fun part of our lives where Valentine's Day, unfortunately, is not really existent for us either. I feel like Valentine's Day is great for new couples and
2 kids with one on the way. Valentine's Day is every day for you guys. Oh, my goodness.
Oh, sure.
How do you find any time to work?
No, actually, in truth, I'm going to use this opportunity to, I think, have the boys, because we have 2 boys, really pamper mom. It's going to be, that and then Mother's Day this year. It's going to be the first year where they're going to really be doing things, and it's going to be about them loving it up for her.
They're going to have a great time doing that.
Yeah.
She is going to enjoy every night.
I hope.
Dan, I sincerely thought we were going to spend this Friday sitting here taking a victory lap. You and I have been waiting for the great pumpkin now for many years. And on Monday, they dropped, finally, the EPA and the Treasury, the 45Z came out. And I thought, well, geez, this is terrific. And only hours later, a Truth Social tweet set the agricultural world, especially beans, on fire, did it not?
Yeah, when Trump came out and posted how he had a great call with Xi, that ended up taking over the narratives this week. There was a lot in there that I still think people are still looking for and asking those questions of how payments make it through the system, whatever you, but at least they're grinding out a little bit more details. But Trump pointing out he had a good call with Xi, maybe getting another 7.5 million of bean purchases in consideration, which, okay, read through that a little bit here. Is it a promise? Not quite, but at least it's on the table, I guess. Market still said, hey, we need to price in the opportunity here because beans going sub 200 million bushel carryout, there's no way to cut that onion and not have it be stinky. You're going to see some price rationing of demand if you see maybe even half of that make it into Chinese sales.
Opened the week at 1063.5. The high was 1137.75. Low 1051.75. Closed 1115.25. That's up 51 on this rather amazing week.
Incredible week. You look at that weekly candle. Wow. I mean, that is a breakout week.
As you mentioned, that 8 million metric tons, should they purchase that tightens up the balance sheet in a very material way. Market has to take that seriously. Somebody said to me during the week, well, the last time he said they were going to buy beans, they did. And in this instance, you'll have to take this statement at face value and consider what would happen here in terms of values if they do actually come in and buy another 8 million metric tons, correct?
Yeah. And let's also be fair here. The breakout above $11 was on the back of a Chinese deal. The breakout above $11 again is on the back of a Chinese potential deal. So this isn't just hot air anymore. This is the market actually putting dollars where the mouth is and actually bidding this up. So yeah, we can't ignore that. Even if you don't believe it, the market is saying, hey, you need to a little bit at least. Don't love how you finish. What is that? 25 cents almost, 23 cents off the highs of the day, whatever it was. You hate to see that, but we still did close right at that spike high, 11.15 and a quarter level. Still a higher high and a higher low after yesterday's inside trade day, which constitutes a breakout of it. You really wanted to see it close above that level to say, put a check mark on the win side for the bulls. But any notion that there was a shoulder potential to form here, the other side of that scenario is you get that rip and breakout, right? And I know you've pointed out the inverted head and shoulder here that could take us the other way too. But pointing out head and shoulders gives you at least a narrative of, hey, if it holds at 11 and fell down and broke these trend lines, we've got a technical reason. If it doesn't and we go through, now we've got another technical reason. And we also found a market that broke through those levels, came back to test support already, went out, found new levels, and came back to test support, old resistance as support. So I very much see beans is trending higher now. It's still, of course, below that 1180 high, but you are out over this box, which effectively was the range high. This old failed potential auction higher, we're getting another opportunity at it right now.
Came into the week likely long about 15,000 contracts in beans on the
Commitment to
traders earlier in the week. Bought 2,000. Next day bought 39,000. Following day, I think this following day was Thursday. Wednesday bought 39,000 contracts estimated. Thursday bought 18,500 contracts. Came into this morning estimated to be long 72,000 contracts of beans. We're going to miss the cutoff because it was Tuesday when this commitment of traders report will have measured. But suffice to say that this rally likely sponsored by this massive fund buying. So I would guess from that perspective, one is not surprised. We should not be surprised to see, especially since we started the week. What did we say? We started the week down near ways away from where we are right now. 1060 something, right? And here we are at 1115, made it all the way to 1137 and change here today. Pullback probably in order. And I guess we show up on Sunday night, Monday, Tuesday to see if we're going to get some follow through or if we're going to begin to consolidate here. Wouldn't you think?
Yeah, I do. And I think when we broke above that 18-day moving average there in mid-January, we held it again here at the start of Feb. We broke out back above the 200, 155-day. Those levels are all below us. I imagine they're all going to come up now and provide some form of support. But even just intraday, right? This 2-day high here, that's where we fell back down. Old resistance for 2 days, now support here into today. If Monday night they decide to take it up, I wouldn't be surprised and to trade that test 1140 next week. But just below us, we know $11 is going to be an interesting supportive area if it comes back down because, hey, that was resistance for so long. You'd like to see the market stay above it.
For the last 3 weeks, bean oil was probably doing the work here in the soy complex. And this week's price action, rather productive as well. 53.22 to open, high 56.14. This is March bean oil. Low 52.62, last trade 55.33, up 182. Outside week for bean oil looks pretty positive, doesn't it?
Yeah, breakout of that downward sloping trend line that we had been talking about since September. That occurred a little bit ago, but it's still came back down to test that 18-day earlier this week, or 52.61. Today, a little bit of an outside day, trading technically lower. Looks to me like a bull flag here up at highs and still holding above this high from the 28th of January.
For sure.
At 54.95. That could have been old resistance, now support. So yeah, bull flag, breakout, market seems to be trending higher.
Interesting in that the meal as well, let's just look at the week here real quick, March meal. Outside week there as well. 294 open earlier this week. High 309.40, low 288.30, closed 303.60, up 10 full points. Outside week in soy meal. Soy meal coming along for the ride, and some argument that we're moving soy meal well within this country and out of this country, starting to show up here on the chart, wouldn't you say?
Yeah. There's definitely a buyer. Somebody is interested in meal below $3. I think that's a key factor that we need to remember. We came below it. It wanted to stay below it, and then we broke out back above it, and we found 3 as support today. So that's a market, to me, that's reversed. Like you said, that outside week, or that outside trade helps in both meal and the oil. getting rejected here at this cluster of 5,500 and 200-day moving averages, but you clear out over that, you got nothing back to highs of the chart there back in November as your next major level. So interesting and good to see Meal come back with a bid. It's at least got a very large range between $3.35 and $3 to play in. And I would imagine if you can get out over that 310 high of today, that would confirm a little bit more of the upside in that range.
Speaking of rejected, March corn opens 428 and a quarter, high 436, low 424, closes the week at 430 and a quarter, up just 2 in the midst of all this drama. Corn kind of taking the week off.
Yeah, ignoring a lot, isn't it?
I was heartened by the ability of corn, much like beans a week ago, to trade up into the middle of the range of the big down WASD bar, right? Yesterday's price action took us, I think, above the middle of that. And then here today, as we bumped into what I believe is the 50, 100, and 200 bar moving averages. We didn't quite bump into them, but we're in the neighborhood, right?
Right.
437, 439, 441 here in the March. The prospect of chewing into these moving averages, and for that matter, the previous lows of that really extended sideways period, looks like corn is going to have to gather itself, pull back and gather itself. Did land right back on what I believe is the 10-day, correct?
I've got the 18-day in the chart at 42.16. I would imagine the 10 days just above it, though.
426 for the 18. Yeah, 426 and a half for the 18, 429 and a quarter for the 10. And a little bit of, you hate to use the word disappointing, but a little bit of muted response from corn, considering the distance we have traveled in beans. And my guess is that you're going to be moving acreage out of corn into beans to the tune of how many million, would you guess?
I mean, at these prices, I don't know if it would shift
in
too
this
much.
economy.
In this economy, with corn still, I think at 430, people are still going to really drive that. But yeah, you get much more out over beans. You could easily see $1 million to $2 million shift. I know there's some people who could say up to 5, but I don't see how that couldn't be the case. Every year we have that question, but you know, it's such an advanced or such a subjective question is hard to land with on an objective reality. Subjective because every farm's decision is very different. And objectively, though, based off of price, what should you do? Well, I would say beans need to be probably $1 higher before we see a major significant shift. But this trend continues, right? You've got it. Well, and again, I think we're going to see the market try to argue that here over the next couple of weeks, right? That's going to be the narrative. And if corn continues to be left behind, high input costs, not as much promise from the government in terms of future usages, demand, ethanol demand. Are we already pushing the envelope there? I don't know. We'll see. But it has been impressive to see the demand, though, for corn, the export demand for corn really take over a narrative there for it. And if that continues, man, it could be an interesting crop year.
March wheat opened the week 539 and a half. High was 540, low 522 and a quarter. Last trade I show 529 and 3/4, down 8 1/4 on the week. Kansas crop conditions, if I remember correctly, came out pretty decent. Everybody else that was having trouble, nobody cares. Wheat down 8 1/4 for the week. Can't give it away. Is this the end of this move here?
Really, really disenfranchising. You know, double rejection from that trend line now. It brings up like this part of the chart looks a lot like this part of the chart to me, right? Where you had this great run, getting above moving averages, and then, oh no, pullback. But don't worry, guys, we're going to do it again. And then, no, we don't. And are we at that no, we don't part that I'm worried about? That 18 days just below 423, the 55 days right around there too. We closed right back on top of that 100-day. And we haven't touched that 200-day moving average since June of 2025. I feel like the broken clock will be right eventually. I keep saying it, but I've been wanting that test of the 200-day for a long time. And the wheat, it just doesn't seem to be able to get it going. And then falling back into yesterday's range and staying in this range, trapped between the 155-day and that trend line, it just takes winds out of your sails, doesn't it?
And really, to talk about any kind of, this is early sledding, and it has been rather productive price action for wheat. Any positive sign, we are willing to hang 2 or 3 Zaner hats on. But you don't get out over that 552 and close convincingly, maybe even over 560. You cannot be talking about a change in trend yet.
It's unfortunate that this whole time up, that shot us into overbought conditions, and we're not in these super oversold. So we'll see. Maybe the roll here into the May contract will help spark some of that buying, as you'll see spreads and other things come in, and spread trading come in to move the needle a little bit. But man, it's a downtrend until it's not. And I don't think we've broken, certainly price action in the last 3 or 4 days has not broken or continued that trend higher. You got to have some conservative thoughts in your mind here.
So if we could change the process for just one market, as we came into the week for cattle, that was the 2nd of February, positive price action. You show positive price action for Wednesday. It had made new highs for this move, and then kind of a lackluster close. And then Thursday, what happens then?
Quick sell-off. And that was a really weird move. And except for the fact that it's done it 3 times since January. You had the very similar move on January 16th, very similar move, I feel like, on the 30th.
January 16th caught my eye too. I was sitting here looking at this move thinking, boy, this never happens except if you look over 15 days.
Just a couple days ago.
Just the other day that happened. And very interesting. Now, widely watched commodity service, the Hightower Group, guys do a great job. He made a point this morning that when you gap lower in these cattle markets, there's some spots here on the chart where you can look at gap lower action. And I'm not sure that this is it, but this rather brutal opening, it looks to me like that gap is closed. But when you have these kind of gap reactions, you can't be surprised if maybe you get a number of days worth of downward price action.
There's something very bullish to talk about on this chart, actually, and it's that gap down we had that we yesterday, and then we gapped up today to fill that gap.
To fill it, right.
Think about that, guys, right? Like, you left an island here. Yesterday is what is referred to as an island. There's no price action connecting it. It was a gap down and a gap up without anything in between. And you could make an argument that we came back down to test into yesterday's range a little bit, so what have you. But where we actually closed to where we opened yesterday is open. And it's probably, in my humble opinion, going to be a gap and go type situation, because this is like an island. You run away and you squeeze everybody who sold yesterday now. Yesterday, they're the cannon fodder for the short squeeze. Anyone who sold cattle yesterday.
Normally, you and I are happy to gloss over some fundamentals and leave the heavy lifting to the bigger brains. But today, I think we owe folks some context, right? So
Sure.
You and I talking back and forth yesterday morning, Dan, what the hell is going on here? Trying to find out.
Yep.
We come to find out that there is only talk of a strike, or the confirmation of a strike in Greeley, Colorado, at what I think was a JBS plant. Am I right about that?
I don't know. I forget who, but that sounds right.
Discussing,
you've got a 60% chance of being
sure,
right? 70%
yeah, exactly.
chance,
There's only
right?
4 of them. And so the talk of a confirmed strike, no timeline, but a strike nonetheless, which these guys are processing 5,400 animals a day. The market gets a little spooked by that. Today, we ink an agreement with Argentina. That was probably in the market as well. Big down day in stocks yesterday, but 2 huge waves of selling.
You just have overbought conditions too, right? Not literally in the RSI, but like, how long are you going to go up without retracing 10 or 20% of this move?
Sure.
You know,
Sure.
And you don't have to look that far back to find run-ups in cattle that exist like that. But hey, it only goes for about this long before you get that decent 10% pullback. And you wonder when that day is going to come. And I think in this environment of volatility, markets are really jittery, right? Like anywhere people sniff an opportunity to take profits, I think funds just hit that get me the F out button, and you have days like yesterday.
And we've been talking about the idea that when they release the headline that says we're going to open the border, the algos will run with that. They won't read the fine print that says we're going to open the border in waves over the next 3 to 6 months. We're going to have 3 checkpoints if we can find the labor to process the animals, if we've got some sort of report on progress from the flies that we've released. If the algos won't read the ifs, they'll just read border open. But I think folks are afraid of that headline-driven volatility. And so you haven't seen the same kind of conviction that we saw last year on some of these rallies. But we were breaking out, I think, as the reality that the numbers, you saw cattle on feed, and you've had some herd numbers out, and the lack of obvious rebuilding, and lack of obvious strategy to rebuild. And so everybody looks at the numbers, everybody looks at the cash market, exports, box beef numbers, everything pointing in the direction of higher. And then you have this happen. It was rather rather interesting. And along those lines, you look at the feeder cattle market, same story, right? Where you didn't exactly get the same type of violence yesterday, but for the week, feeder cattle 363.20, open 373.60 high, 360.82 and a half low, 367.42 and a half close, up 7.15 on the market. Even with yesterday's violence, you almost can't see that on a weekly chart. It just isn't there.
It just looks like a trend higher. Those few blips on that daily chart are just, they're not existent. And not unsurprising, right? Because when you dial down here, it becomes a little bit more of a channeling chart, right? You've got a pretty clear channel that the market's headed up here in the last few weeks, but that 18-day moving average to me is now that clear sign of support, 362.83 on that. This box, this gap that we found as resistance and had to chew through on the way up, that's where I'd be thinking about a downside target, or if the market really rolled over into this 155-day moving average at 342 along with this box, that's where I'd be looking for that support, which also, by the way, is almost that 10% down move if you were to get it. So we'll see what happens if the market decides to roll over or not get up to fill this gap. But the big level to the upside we're all considering and looking at too is the potential to fill this gap up at 375. We did not do it the other day. It got really close. We fell back down. The gap is still open still. I would love to see this chart get cleaned up, new all-time high, and then maybe a substantial pullback. But I think
373.60 was the mark that we set, and we needed to get to 375, right?
Yeah, right. It's exactly right.
Gun to the head, you say new highs?
Gun to my head right now after yesterday's price action, yeah, I think we do new highs before we break below this kind of 3 days of wicks. But yeah, again, 360 below there, that changes a lot, and you're going to have to do some rebuilding, I think, at that point.
Very interesting. Fats the same way?
Just about, right? Feb Fats here, though, had a little bit more of a dramatic pullback yesterday, actually tested the 18-day and that similar box. 155-day are still below around 231 and 229, respectively. A bigger pullback in the Fats might take you down to that 200-day, what have you. Another open gap way up there, still a long ways from trying to fill the lows at 248.22 from back in October, right? Again, gun to my head here, this still looks like a market that's trending higher. Yesterday's sell-off, the fact that we recovered so well is the reason I think that there's still some potential for a higher price action. But if feeders are going to go into a new all-time high and close that gap, if Fats want to do so too, that means feeders are going to have to go substantially into a new all-time high, because we're not going to go 20 points handles higher in the Fats and only 10 higher in the feeders. At least I don't think we will. So we'll see. It's a interesting dynamic. I definitely think everybody needs to be thinking about protection still at these levels, because let's not forget that in October and November, we were all kicking ourselves for not doing anything. But at the same time, I do think an uptrend has entrenched itself, and all-time highs is within striking distance. It's within striking distance.
Yeah, for sure. What I think we've got it covered. Can you let everybody know what is going to
be
we've got when we get to Commodity Classic?
You got it, folks. And for those that don't know, if you have any questions and are looking to talk more with us on markets, we will be attending Commodity Classic down in San Antonio this year on February 26th. We'll be going to be filming a live recording of the Zaner MarketCast, where you can get real-time market news and ask us questions directly. You can see this from 2 to 3 p.m. at booth 3391, that's 3391, where you can also meet our chief market analyst, Karen Braun, or get to know more about our RMC division. It'll be a great time. San Antonio always is. It was my first Commodity Classic years ago, and we've been waiting for the opportunity for it to come back around. And if you are going, feel free to come by and check it out.
Dan, I think the question of the week is, if you were going to Commodity Classic, how easy would it be for you to get a Zaner Ag Hedge hat?
I feel like it's as easy as walking up to our table and walking away with one, Joe. You might stop by to at least say hi to a member of our team, but hat, beer openers will all be available for anyone who wants to come and check us out.
Maybe the downside is they might be forced to have a conversation with either you or I, and that could last for an hour. But it's still a hat. You know what I mean?
And then if you end up having to come to dinner with us and go out for drinks, it's just a terrible thing. What a terrible night. Yeah. Well, thank you for listening to the Zaner MarketCast today. If you need more because you just can't get enough of these two smiling faces, you can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. You can also get our daily market commentary by signing up for the Ag Hedge hotline hosted by Ted Seifried. This free hotline gives access to
Free.
our daily commentary and gives you a chance to connect with us personally. And if you have any specific questions about the market, our agricultural commodities as a whole, there's a link down in the comment section to do just that. Well, thanks again, and be sure to follow along and comment the podcast to not miss a beat, and we'll be back with you as price action develops.
Have a great weekend.